We need your support. Click the like buttons below. Now onto the video. Welcome to readtheticker.com. Today we're going to read the ticker of Yamana Gold, symbol AUY. Quick article on Motley Fool says it's done its cost restructuring, new mine coming on board, cost under control, revenues are going to be up because they're going to be able to produce. This is July the 6th. Okay, you can find that there. They consider this a possible long-term buy. And it's there's an interesting point there. Investors now have the great visibility to Yamaha's production and cash flow growth. For the potential, the stock looks like a great long-term bet. It's just 5 times operating cash flow, which is exactly half that of Goldcorp. So let's have a look at price action, see if there's accumulation going on there. Here's our monthly chart of AUY, Yamana Gold. As we can see here, we've got a nice sideways consolidation. Our rally at the end of, beginning of, was it 2016, I think. A bit of a sell-off. As you can see, the narrowing of the spread. This is a monthly chart. All that volume there. You've got all this volume here, and it hasn't gone down. It hasn't taken out the low. So that's people adjusting for positions. The weak hands given up. The strong hands are buying. And we've got a slight little step up here, bit of volume. And most important is this period here. Look how low the volume got. That means the selling supply, all those who wanted to sell were pretty much done. And people saw that. They were waiting for more supply. They realised no more supply is coming in. And so there's a bit of a buying spurt. Okay? And our RTTOBV Wyckoff on balance volume indicator shows that we had a period of demand here, obviously, but this indicator is good on the monthly chart because it just summarises the strong demand and strong supply points. Just like any on balanced volume indicator, but just highlights the major points. Strong demand, a flattening period. As you can see, there's no new low. Right, there's a higher high, but this indicator went back down to where it came, where it came. But what that basically means is that that's even more bullish because all that volume tried to bring it back down, but it didn't have the strength to take it down to a new low. So that basically is accumulation. Okay, because people were buying on the down. As we said before, the big boys, they can't buy on an upswing. They must accumulate, or they prefer, I should say, they prefer to accumulate on a downswing because otherwise they're buying against themselves, building the price up. And as they want to get the best cost average, they want to try and buy and accumulate on a downswing. And to do that, they must push it down. So we see the accumulation in the monthly chart. Here's a few technical indicators I like to look at. We just scroll down here to our MACD, 7040. As you can see, it's creeping above the zero line, which obviously the bullish territory in the green. And our popular, standard moving average is 50 EMA and 100 EMA, and as you can see, you can't exactly see there, but it is actually trying to climb above it. And our RTT trend status weekly tick shows that moving from a pretty bearish position. Look at that dark purple low there, pretty much timed that perfectly. Spring is, as you can see, it's slowly getting grayer and climbing to the bullish side. Example like this stuff. So, as you can see, accumulation. Okay, what else we got down here? This is just a close up of the daily chart, of the chart we've seen up there. Right, here was an interesting chart. Here's our volume wave. Whoop, keep still. There we go. So as you can see, let's say from about, we go here, all these double blue lines, all the down waves and volume red bars. See these down volume waves, which is this period here, this period here. The volume doesn't make new ground. There's no damage to support. So all these down waves, people are buying, and as you can see, the green waves are slowly creeping up. The green waves are breaking resistance highs, and eventually it's going to jump the creek. It's still a little bit of a jumping the creek here. You call that jumping the creek 1, and eventually it's going to jump the creek 2. Okay. Let's have a look. This would have been jump the creek 1. I guess my guess is this will be jump the creek 2 when it gets over there, something like that. So we've got a minor sign of strength here. That's a minor sign of strength, goes up to resistance. Okay. Up here is minus sign of strength. Obviously this is a major sign of strength here, and this is just a consolidation for all those Fibonacci buffs out there. You know, it's above the 60%, so Nothing wrong with it. Technically, this chart has shown it's a good chart with strong accumulation over a period of time. Oops. So once again, people are big. This is similar to a lot of gold and silver stocks that have repairing balance sheets, you must say, and repairing profit and loss statements. People purchased, accumulated the stock up here, knowing that the time is about to change. The repairing is going on, and as AUY is sort of showing, now they realise that the repairing's done over this last 12 to 16, 18 months, and eventually I think the stocks are going to rise. With or without the S&P 500, but they'll just rise on their own sector, because I believe gold's going to slowly creep up as well. So I believe gold's doing a bit of a terminal shakeout, busting stocks before it goes higher. As they say, you must pull the bowstrings back to let the arrow fly. You're going to pull the bow back, to pull the arrow back, and then let it go to fly. So the bow will spring back, and just so will price. As on the moving average front on this stock, it's very interesting when I just scroll down my weekly moving averages. If you look at, here's my weekly moving averages for Yamana Gold. As you can see here, the blue line is what is the blue line? I think it's the 200 weekly moving average. What's the purple line? There's a blue one. Oh, it's the 50-week moving average. My apologies. The blue line is the 50-week moving average, and as you can see there, it's starting to get underneath it, so it's getting support from the 50-week moving average. And the purple line is resistance, which is the 200 weekly moving average. So once the purple line is pretty important. Now this chart here, you see a lot of moving averages which don't have any effect. I just use this to find which moving averages are showing some sort of dominance. So once I find those, I'll peel them off and undo the ones that aren't relevant. So at the moment, this chart, I'll be watching the 200 weekly moving average and the 50-week moving average. The 200 weekly moving average price is $3.30. So that would be jumping the creek too, right? Jumping the creek. So once it's over that, it could quite quickly get to $4. And as you can see, there's plenty of resistance. So keep an eye on AUY. It's building up phase C of the Wyckoff pattern. Okay. So for example, this will be phase A, phase A, where we are, phase A, phase B-ish, phase C up to here. If it goes up, it's phase C. Otherwise, if it doesn't go up, it's going to be redesigned as phase B. But at the moment, we're hoping for a phase C. Here's your point and figure chart. As you can see, that from this point, there we go about here. Put that line there. All the volume waves. See the red bars showing down waves. They're not really doing any damage. And the green bars. This green bar here, bang there. Oh, come on, where is it? Oop, up and up. You see how they're starting to do damage? Okay. So the damage has been done to the creek rather than to the ice, or the resistance rather than the support. Okay. Typical buying after a period of accumulation, because the supply is not there anymore, so they have to buy, but they have to break prices above it. When they go to the bid and ask, they have to hit more bid prices to accumulate the stock float they want to accumulate. Beforehand, there was plenty of supply, so when they went to buy the stuff, they were buying on the ask because the price kept on coming down to them. Now they're buying on the bid because they have to accumulate, prices are slowly creeping up. So this is because the supply, those who wanted to sell are all done, basically. That's what we're trying to say. So that means there's accumulation going on. Accumulation where support holds. Okay. This is accumulation. Sorry. This period here is accumulation when support doesn't hold because it's busting. People are selling there and they're buying, and the big players are buying it. Okay. Just another monthly chart. It's just the typical, initial. I don't think it's even a head and shoulders. You get initial strength, consolidation. Obviously, it went up too fast. A bit of excitement. Now it's the truth rally. This is the potential rally of all what could go right, and now that this will have a truth rally coming out because it's going back up on truth. All right. This is this big move down here. This is like the automatic move after a big move down. This is a massive shortcutting. Now we're going to have, soon we get a rally based on truth, i.e. that the company's doing better and prices are better and it's going to be more profitable. So I have a good forecast for those gold and silver stocks which have good balance sheets and which are showing signs of repair and which are showing that they are creeping up a little up high because the accumulation is not easily done on the ask. It's now been done on the bid, so prices have to break damage into higher ground. So depending what might spark, if gold rallies up a bit, this is going to go up a lot quicker. Obviously, if there's something else that pushes gold down or silver down, then this just might take a bit more of a 10 or 15% dip. But if you're holding this for 2 or 3 years, I think this will compete with your bitcoins and whatever else is going on out there. So keep it out, put it on your watch list. Thanks very much for watching.